Hello, class 12th student. Today I'm going to start chapter 3. Topic is measurement of national income from your book Macroeconomics. In this chapter we are going to discuss about three methods to calculate national income. These are value added income method and expenditure method. One thing you have to keep in mind, you use any method, the answer will be the same. Okay? So first of all, we are going to discuss about production method or value added method. So what is this? Production method or value added method is the method which measures national income by estimating the contribution of each producing enterprise to produce in domestic territory of a country in an accounting year. Here, when we use production method, what we get? We get GDP, MP. Okay, and then we add within that NFIA. In this way, we calculate national income. Okay, so here is the basic equation. Value of output yani value added, sales plus change in stock. Change in stock, how we calculate? Closing stock minus opening stock. Okay, now here is given the concept of value added. Value added is what? How we calculate GVA MP. So when we subtract indifferent cost from the value of output. So in this way we calculate GVA MP. Okay, now here is the whole process. Suppose a farmer produces wheat and he don't purchase anything from the market. Yani wheat, fertilizer, labor, land, everything he make the use of his own. Okay, in this way the production wheat he sell to miller at 100 rupees. Okay, now this miller, flour mill, convert this wheat in flour and sell it to 120 to baker. Now baker convert this flour into bread and sell it to 200, okay, to consumer. So what is the final output? Final output is bread. And what is its price? 200. That is available for the customer. So there is no value addition remaining. So this is what, this is your final output, that is bread. Okay, now here you can see there are three basic stages of production. First, where farmer produces wheat. Second, miller who convert wheat into flour. And third, baker who bake this flour into bread. So these are the three production unit. Now you can see production output. So here is the prices. Output is 100 for the wheat, 120 for the flour, and 200 for the bread, and this is available for the user. Okay, now we talk about the intermediate consumption, yani ki what expenditure made by these production unit. So if I talk about the farmer, so already I had told you ki farmer has make the use of its own input. Okay, so he has not purchased anything from the market. So here is intermediate consumption या expenditure on purchase of input is 0. Okay, now this flour purchased wheat into 100. So here he just added 20 rupees and 100 rupees he had paid to flour. He has paid to wheat for the wheat. The wheat is the intermediate cost for the flour mill. Okay, now if I talk about the baker, so he purchased the flour in 120. So this is the intermediate consumption, cost of intermediate input. Okay, now he sell the bread into 200, yani he added 80 rupees. So you can see कि farmer added 100 rupees, flour mill added 20 rupees, and bread added 80 rupees. When we add these 100 plus 20 plus 80, what we get? We get 200. So this is the GVA MP. Okay, contribution of, when we add contribution of all production unit, so that is known as a GVA MP. Okay, and how we are doing it? By value of output minus intermediate consumption. So 100 minus 0, 100. So value added by the farmer is 100. Now if we talk about the flour mill, so 120 minus 100, because intermediate consumption is what? 100. So when we subtract, we get 20. Now baker, so baker, he expended 120, okay, on intermediate cost, and he sell bread at 200 rupees. So when we subtract, we get 80, yani ki he has done value addition of 80. So when we add 100 plus 20 plus 80, we get 200. So this is the whole process of value addition. In very, very simple language, it is related to value. It is the sum of value added by each production unit. So farmer had done value addition of 100, miller only 20, because 100 is the cost of wheat. Okay, baker, so 120 he paid for the flour, and he sell the bread at 200, yani ki he had made the value addition of 80 rupees. Okay, now value of output. So market value of all goods and services produced by an enterprise during an accounting year is known as a value of output. And value added is what? It is difference between value of output and expenditure done on input during a period of 1 year. Okay, the next important topic related to production method is problem of double counting. So its name clear, its meaning, double count, yani when you are counting the value of one thing more than one time. So this is what? This is your double counting, when you are adding something two times. So what is the meaning? Problem of double counting refers to adding the value of one input more than once in national income. Okay, so why it is problem? Because it overestimate the national income. It give wrong figure of national income. How we can avoid it? So there are two methods to avoid it. First is final output product and value added method. So final output, yani ki in the previous example here, you can see ki final output is what? Bread, and it is available for the consumer. So we just add the value of all final goods and services. So this is the one way. Second is what? We are going to add only contribution of all production unit. Okay, so this is known as a value added. So still when we add, so we get 200. So you use any method, you get the same result. So in this method only the value of final output are included. The value of intermediate cost are not included, like price of wheat that is paid by flour mill, and price of bread, baker who paid 120 for the flour. So it will be excluded. In the above example, value of bread is only included as the value of wheat, flour, and are included in it. Now value added method. In this method, the value added is in various stage of production are taken into account while estimating national income. Okay, the value of final output is equal to the sum of value added. So both give the same result. Now how we can calculate national income with this method? So here is the explanation. We use two steps for calculating national income. So in step 1, we use basic equation. When we use basic equation of production method, what we get? We get GVA MP or GDP MP, यानी gross value added at market price या फिर GDP MP at market price. Okay, how we get? When we subtract intermediate cost from the value of output. So this is the equation, value of output minus intermediate consumption. So when we use this equation, what we get? We get GDP MP or GVA MP. Okay, now value of output We can write it sales plus change in stock minus intermediate consumption. Okay, and we can use another equation, that is domestic sales plus export plus change in stock minus intermediate consumption. Now, after doing this step 1, we use step 2 for calculating the national income. So here it is written in more clear format. Step 1, when we minus these two, value of output minus intermediate consumption, we get GVA MP or GDP MP. It is the explanation of this value of output. Domestic sale plus export plus change in stock. Okay, this is the complete equation. Now, step 2, we get GDP MP and we want NNP FC. NNP FC means national income. So what we have to do, when we move from gross to net, we subtract depreciation. When we move from domestic to national, we add NFIA, or when we move from MP to FC, we subtract NIT. So in this way, we are able to calculate NNP FC. Okay, NIT, how we calculate NIT if it is not given directly in the question paper? So indirect tax minus subsidy. Okay, change in stock, how we calculate? Closing stock minus opening stock. So if you remember all these equations, there should be no problem when you are attempting any numerical question. Now come to the next method, that is income method. So what is this? According to income method, national income is estimated by adding income earned by all factor of production from their factor service during a year. So whenever you use income method, you get NDP FC. So when you add NFIA, it converted into NNP FC. So what is income method? It is also called distribute share method या factor payment method. So this is the alternate name of this method. Okay, according to this method, national income is estimated in terms of factor payment, okay, to the owners of the factor of production during an accounting year. यानी कि rent, royalty, interest and profit that is given to for factor of production, when we add, we get national income. Okay, so sum total of factor income generated within the domestic territory of a country is called domestic income. Net factor NFI, net factor income from abroad, is added to change this domestic into national. Now, these are the part of compensation of employees. So compensation employees include wages and salary in cash, यानी monetary payment. Okay, payment in kind, it is related to all the accommodation given to employer by the employees. ठीक है. Next है employers contribution to social security scheme, and the last component is pension or retirement pension. Remember, if there is written old age pension, so that is not included because it is a transfer payment, but retirement pension is only given to those people who has done the job in a particular organization institute. So these are the component of COE, compensation of employees. So compensation of employees include 4 things. Now next is operating surplus. So operating surplus, it's very important for your 3rd mark, 3 marks or 4 marks. Okay, what do you mean? Income from property and entrepreneur in the form of rent, royalty, interest and profit is called operating surplus. Now, income from property, so it includes 3 things. Rent is given to on ownership of land and building. Royalty, it refers to income generated from granting, leasing right, copyright. Okay, for example, payment for the use of oil or coal, disposes, patent or copyright. Interest is a factor income given to owner of capital. So in this way, income of property include rent, royalty and interest. Now income from entrepreneurship. So entrepreneur, what he gets profit. Profit is is a factor income generated from entrepreneurship. The profit generated by a particular unit is divided into three categories. Okay, remember entrepreneurship always receive profit, and this profit is further divided into three parts. So profit means what? It is sum total of dividend, corporate tax and corporate savings. So dividend is what? It is given to shareholder. Corporate tax, it is paid to government. Corporate saving, after these two payment, whatever remain, that is known as a corporate saving. Its another name is undistributed profit and retained earning. So in this way, operating surplus means what? It is the sum total of rent, royalty, interest and profit. Profit is sum total of dividends, corporate tax and corporate saving. Now, the third part of income method is mixed income. So mixed income is what? It is an income of self-employed person using their own land, labor, capital and entrepreneur in their household enterprise. Okay, these income are mixture of wage, rent, interest and profit. That is why it is known as a mixed income. Okay, like a barber, a person is running a salon, a woman is running a beauty parlor, vendor, a small shopkeepers. So these are the example of mixed income. Okay, now here you can see कि whenever we use income method, okay class, so we add compensation of employees plus operating surplus plus mixed income. Now compensation of employees include three things: wages and salary in cash, wages and salary in kind, employers contribution to social security scheme plus retirement pension. Okay, now operating surplus, so income from property, rent, royalty, interest and income from entrepreneurship yani profit. So profit include dividend as distributed profit and corporate tax and mixed income. So this is the complete concept when you are using income method. Okay, so here you can see if you want to calculate national income by income method, so in step 1, when you use income method, what you get NDP-FC by using the equation COE, OS and MI. Okay, COE compensation of employees, operating surplus and mixed income. Compensation of employees include four things: cash, wage in kind, employees contribution to social security scheme and retirement pension. Operating surplus, it is the sum total of four things: rent, royalty, interest and profit. Profit include three things: dividend, corporate tax and corporate saving. So adding all these, what you get NDP FC. Okay, and for calculating national income, we want NNPFC. So there is one different, you are moving from domestic to national, so you are going to add NFIA. Now come to the next method, that is expenditure method. What is this? So according to this method, national income is estimated in terms of expenditure on purchase of final goods and services produced in the economy during an accounting year. Whatever expenditure done on the purchase of final goods and services by four sector of economy, it is known as a expenditure method. Since final expenditure comprise, yani it is sum total of consumption, investment, it is also called consumption and investment method and income disposable method. So this is the alternate name of this method. Estimation of expenditure on the final goods produced during the year is equal to GDP MP. It is adjusted to find out NNPFC. So you are having GDP MP by adding C plus G plus I plus X minus M. Okay. Now, what is final expenditure? So final expenditure refers to expenditure on final goods and services. If an enterprise uses goods purchased from other enterprise for resale as raw material, so it is considered as an intermediate good. On the other hand, if goods and services are produced for final consumption, then it is final expenditure. Okay, now component of final expenditure. So whenever we are using expenditure method, we are going to add C plus G plus I plus X minus M. So C यानी private final consumption expenditure, it is done by household and non-profit private institution. Okay, it include religious place, NGO, orphan house. Okay, household matlab all the family. Government final consumption expenditure. So government purchase a lot of things to give public amenities. So that is included. Gross domestic capital for, so it is expenditure of government. It is expenditure of private sector and government sector on investment. Net export. So when we subtract export minus import. Okay, gross domestic capital formation, it includes 2 point gross fixed capital and inventory investment. Now we are going to understand all these in detail. So private final consumption expenditure, it include two things: household sector and non-profit institution. It include helpage, orphan house, religious places. Okay, so whatever expenditure done by these two, it is considered as a private final consumption expenditure. Now government final consumption expenditure, it refers to expenditure done by the government on purchase of final goods and services, like expenditure on purchase of goods for consumption by the defense proposer. Okay, now investment expenditure, so it refers to expenditure on purchase of final goods by the producer. These goods are to be further used in process of production. Okay, like a farmer purchase tractor, so it is what? It is investment. Investment expenditure is further divided into two parts: fixed investment and inventory investment. Fixed include business fixed investment, business investment by the household in terms of construction of houses, and public fixed investment are fixed investment by the government. Inventory investment refers to change in existing stock. Now net export, so it is the difference between export and import. Okay, so how we are going to calculate national income? By using expenditure method. So whenever we use the basic equation of expenditure method in step 1, what we get? We get GDP MP. Okay, and what is the basic equation? C plus G plus I plus X minus M. C matlab private final consumption expenditure done by household sector and non-profit institution. Government final consumption expenditure for producing public amenities, defense. I, it is a gross domestic capital formation done by producer sector. Okay. Okay, I is always sum total of two gross domestic fixed capital formation plus change in stock. X minus M yani net export. When we add these four, we get GDP MP. Now if you want to calculate national income, so national income matlab NNP-FC. So in step 1 we add all these, we get GDP MP. So when we are having GDP MP, when we move from gross to net, we subtract depreciation. When we move from domestic to national, we add NFIA. When we move from MP to FC, we subtract NIT, and in this way we get NNP FC. Now precaution regarding all the three methods. So in value added method, only value of final goods included. Why? Because if you include intermediate good, so it will be overestimation of national income. Next is sale of second hand good not included, but if any commission is given on it, so it is included. Self consumed output is included, like a farmer produces wheat, so its inputted value will be added. change in stock to be included. Okay, why? Because it is a part of capital formation. Imputed value of own occupied house is also included. Now if we talk about income method, so transfer income is never included. Why? It is a one sided payment and there is no increase in the production of goods and services. Capital gain, it is also not included. Why? Because there is no change in the volume of goods and services. Financial transaction, it is also not included. Why? Because there is just change in ownership, there is no change in the volume of goods and services. So thank you. If you are having any doubt, you can ask in your live class.